Joshua, always a pleasure to see you and what your company is doing. I'm looking forward to hearing what Soona and Stefan have to say about what they're doing. Did we miss Beyond Meat and Blue Bottle going public? Did we miss that liquidity event, collaborative fund?
Yeah, I mean,
Yeah, I'm just joking.
What can I say about it?
Well, welcome.
Congrats.
I'll let you introduce yourself and the rest of your panel. I'll hop off and come back and interrupt you at about 2:20.
Great. Right. Sounds good. Thanks, Kareem. As Kareem mentioned, I'm Joshua Rivera. I'm the general counsel and an investor at Blockchain Capital. We are an early stage venture capital firm that focuses on crypto and blockchain. We have 5 funds, and we invest primarily seed and A stage. And we do that in every industry vertical. I'm really excited to have Soona Amhaz and Stephen McKeon. Soona from Volt Capital and Stephen from Collab Currency, who's an affiliate or I guess sister fund, Stephen, of Collaborative. They're 2 people that I absolutely love talking about the industry with, and they've got great insight and really large brains. And so I'm really excited to talk with them and to share with you all kind of our view of the industry. So to begin, I'm going to let them introduce themselves, talk a little bit about their funds, so that you have a context and understanding of kind of what they're doing in the space. And then we'll get into some interesting topics. I think the theme of our panel is looking back on 2020 and trying to understand the crypto investing space within that context. So Soona, I'll start with you.
Yeah, sure. Thanks for the introduction, and really excited to be here today. Similarly, love talking to both of you guys about things going on in the crypto market, and I'm glad we can rope in everybody else into the conversations that we have on a pretty consistent basis. So I am a founding partner at Volt Capital, which is a venture fund that's focused on companies that are helping crypto cross the chasm. So we are looking at picks and shovels around digital assets instead of speculating on the tokens themselves. A key tenet to how we view the space is, look, like crypto will not be successful until the crypto part is invisible. We are not on this Zoom webinar because we all want to use protocols like TCP/IP or HTTPS or a handful of others. We're using it because we all want to be on a remote hangout and have this conference. And we think similarly, a lot of the winning companies in crypto won't have adherents and users because they want to use Bitcoin or they want to use Ethereum and they have loyalty to a certain protocol, but because the end user service is just 10x better than anything else on the market. And so we look for those companies that oftentimes service both Web3 and also traditional web companies too, that couldn't even care less about crypto, but just really like the services that the companies provide. We are, looking at end user services. We look at digital asset intermediaries, and we look at anything under like open finance bucket. So that's primarily what we're focused on as a fund.
Stephen?
Great, thanks Joshua for inviting me. So I manage Collab Currency. As mentioned, it's a crypto-focused venture fund that's spun out of Collaborative Fund. So Collaborative was investing out of the main fund for a while, and then we spun up this separate pool of capital with a separate team to really just dedicate to this space 24/7. My background is as a finance professor, so not surprisingly, our focus is around financial infrastructure within this space. Financial infrastructure captures a pretty wide swath of crypto. Most of it is financial in nature, whether it be payment systems, insurance, lending. We believe that these systems are going to touch every segment of finance. And so in terms of geography, we'll invest anywhere. We've got positions in Asia, in Europe, in the Middle East, and also in the US, although many of these are actually hard to define with regards to geography because they're decentralized teams. In terms of structure, we'll invest both in equity and tokens, but I couldn't agree more with what Soona said, that we believe that a lot of the technical details need to be abstracted away for the end user to go mainstream. One of the things we often say is that people are not drawn to the tech stack, they're drawn to the features that the tech stack enables. And so try to keep that as sort of our North Star. But we do believe that in a decade's time, everybody will have digital wallets, meaning a very high proportion of society, much like everybody has an email address. It'll just be the way you receive and move value. And so we're investing towards that vision.
Awesome. Well, we've got a lot to talk about in short time. As we think about 2020 and kind of, you know, when I think about 2020 in the context of investment and the context of kind of broader macroeconomic forces and kind of social forces, obviously it's been a really acute time of disruption. We've had coronavirus that has just kind of completely kind of changed the way we do life. And in kind of response to that, we've seen all kinds of kind of macroeconomic responses, whether it's quantitative easing from our government, which we now talk about in the trillions, right? When we used to talk about, like, you know, cash injections into the economy in the billions, now it's the trillions. And we think about those things in the context of already kind of you know, some interesting global trends. For example, negative yielding debt in the, you know, in the tens of trillions or close to the tens of trillions. So I'd love to get your thoughts from both of you on what that has meant for the crypto community, ways that it has affected the crypto industry. Is it good? Is it bad? What have we seen? And how is it going to continue to kind of affect the development of the way we invest in this industry? Soona, go ahead.
Yeah, well, I think you're alluding to it and really setting up context for it, in that we have trillions of dollars of debt, and that's just on balance sheet. I mean, off balance sheet liabilities to an aging population, you know, Social Security that's not entirely guaranteed, and all these things really paint a dreary picture within the U.S. And that doesn't even account for what's going on with a lot of these sovereign borrowers who have their debts denominated in USD, who, like, which, you know, in a deflationary economy, cash is king. So even though we are in a lot of debt, USD goes a lot further than it does in like any other climate right now. But that's not the case for these sovereigns are trying to keep up with the debt that they owe, that are denominated in USD. And so they are ramping up their supply chains. They are ramping up just their massive printing to keep up with the debts that they owe and to keep operations within the country going. And so that's all to say we've seen massive devaluations of currencies that are not in USD, because a lot of these country citizens are realizing that their native currencies don't go as far. And it's almost impossible to get USD because they don't have much in the way of reserve currencies or reserves in USD. And we saw the lira collapse, like it lost 80% of its value. Naira is losing a lot of value as well. And so when we talk about the macro climate, not only does it look pretty bad in the US with regards to our debt printing, but also on the native currency level outside of the US. And what this actually is culminated into, and what we're seeing, is increasingly stable coins is how money is being moved between countries. We have an initiative called the DeFi Alliance that we launched alongside TD Ameritrade, Jump Capital, or Jump Trading, which is the largest and only, I believe, crypto partner for Robinhood, and Cumberland DRW. And when we asked our partners what they felt was the most interesting use case for them in DeFi, they all pointed to stable coins, because they are seeing that that's how money is being moved between countries. So we went from like a $500,000 market cap for stable coins in 2017, and now we're at over 25 billion. So that, I think a lot of that growth has largely been because of what we've seen this year. And I think that's, when you ask about what the macros led to, that's the biggest example that comes to mind.
Awesome. Your thoughts,
Yeah.
Stephen?
So totally agree with the currency printing being kind of a a theme that is being discussed a lot. And so maybe just to have a different take, I'll zoom out to a bigger picture around trust. So, I mean, we frame a lot of the stuff in this industry around the concept of trust. Economic activity doesn't happen without it. And I think 2020 has really altered the trust environment in some important ways. And if you zoom back into history, right, and think about like how has society produced trust? Prior to, say, the 1840s, it was mostly repeated transactions. And then we had this huge technological shock, which was the steam engine, later the combustible engine. And what that did is it really altered the ability to transact at distance, and it altered the mobility of labor. All of a sudden we went from zero to like hundreds of thousands of miles of railroad track. People started coming from Europe because the steam engine dropped the cost of travel across the ocean precipitously. And all of a sudden these trust producing mechanisms of repeated transactions failed. And so all of a sudden we spawned all of these institutions. So if you look at the banking industry and the financial markets and insurance, all of this sprung up right after the 1840s when we had this shock to the contracting environment. And I guess what I would highlight with regards to 2020 is that over the last couple decades, we've had another shock, of course, which is the internet, which has altered the same two things, the ability to transact at distance and the mobility of labor. And I think what 2020 has brought into stark contrast is just how mobile labor is. I mean, look at what we've been doing over the last 9 months, right? Everybody has effectively been working, not everybody, but certainly knowledge workers who can do work over video and electronically have been moving all over the place. And so these institutional trust production mechanisms don't work anymore in this environment, right? So many times they're bound by jurisdiction. As Soona mentioned, a lot of times value has to move across borders. And so we need new machines to produce trust, right? And to me, this is the essence of crypto and blockchains, is that they are trust producing mechanisms that are natively digital and global and many times automated. So they actually match the contracting environment that we find ourselves in today. And I think that with COVID and this mobility of labor that we've really seen play out this year, it brought that into sharp relief.
And do we feel like the like kind of like more of the general public will say, or maybe more of kind of the institutions, like the traditional institutions that transact in trust, have they kind of woken up to this need for a new engine, or are we still kind of incognito mode, or is it like, oh, like something's not working here, and we feel like we have the answer here in the crypto industry, but it's other people still need to kind of wake up to it? Are they waking up to it? Like, what is that process like? Have we advanced in that way over 2020?
Yeah, so I'll just respond quickly to that.
Yeah.
I think that, it's certainly advancing rapidly inside of crypto, but I don't think that many of the institutions, the larger incumbent institutions, have fully woken up to this. I think insurance is a great example. Right? So it's very hard to get coverage for things like smart contracts from traditional insurers. And so the crypto industry, effectively invented their own solution. Nexus Mutual is a great example, and there are others coming to market as well. And, we believe that trillions of dollars are going to be conducted via smart contracts in the future. This is going to be just the mechanism that controls the movement of value across many different segments. And what's going to happen is that these natively crypto solutions to many of these challenges are going to all of a sudden surprise many of the incumbents that just haven't been thinking around the problems that this new paradigm sort of presents. And so that definitely informs our investment thesis.
Soona?
Yeah, I was going to say Stephen is right that these larger firms and institutions haven't fully woken up to crypto as a whole, but crypto, of course, is not a monolith. So with regards to crypto native applications, smart contracts, as Stephen had mentioned, they absolutely aren't even touching it or looking at it, and a lot of them will use the idea of like regulatory clarity is the reason they're not even beginning to understand it. But I also think it's largely because you can't really tell up from down, left from right, if you aren't close to the ground and really keeping your pulse on these things. I will say the one piece of crypto that we've seen institutions do a 180 on, the running joke for, gosh, the past 5 years was institutions are coming in 6 to 9 months, and every 6 to 9 months it would shift over a little bit, that time window. And I mean, look, like MicroStrategy allocated $425 million of its treasury to Bitcoin. Square had $50 million of its balance sheet put into Bitcoin. Larry Fink, CEO of BlackRock, saying, you know, he's potentially wrong about Bitcoin as an asset class. And the Overton window has shifted, and we think there have been a lot of skeptics that have been made believers only as recent as this year.
Yeah, I think that's right. Paul Tudor Jones also has been a really vocal proponent of Bitcoin, of saying like there's something here, and I think that Bitcoin is not is cheap for what, you know, the kind of panoply of possibilities that it provides. We've seen some encouraging engagement from PayPal and Visa, particularly on the stablecoin in the stablecoin context, like you mentioned, Soona. So yeah, you know, there is. I think it'll be interesting. Obviously, a lot of these companies, maybe BlackRock and MicroStrategy accepted, but they're kind of more innovative, forward-thinking fintechs. And so maybe there's still some work to do to get towards the kind of older, more distinguished institutions that have kind of traditionally traded in our trust over the last several centuries. But yeah, I think you know, I think you guys make great points. I'm also interested. So Soona, you talked a lot about end user experience and the abstraction of the technology away, and how that's a really particular focus of your fund. I think that is such an important concept, because you know, it's really easy for, you know, for example, Soona, Stephen, and Joshua to kind of all get in a room and kind of geek out about all the technicals aspects of crypto, and like why it makes sense, and why there's like Byzantine fault tolerance, and why it's like, you know, game theory proof, etc. But talk to us a little bit about how, like, what that process is of achieving end user kind of adoption, understanding. How do you identify the leading entrepreneurs in that area, and how do you then invest in them? You know, write them a check, obviously, but like provide them with kind of all their provisions to be successful to achieve that goal, which I think it's easy to say that we generally have not achieved yet in the industry.
So I can speak real briefly to that. You know, one investment that I think back to when I think about, you know, onboarding the masses is Rainbow Wallet. So Rainbow Wallet is sort of a mobile wallet that focuses on DeFi and NFTs. It's everything within the Ethereum ecosystem. But we invested in that pretty early, like 2 years ago, kind of before DeFi was a thing, before NFTs were a thing. And we believed that's where the world was going. But when we looked out across the landscape, we said what we really need, I mean, what the world really needs for this ecosystem is something with a super clean UI that abstracts, as we mentioned earlier, most of these technical details to the background. And the thing that attracted us to Rainbow was that they were, the founders, their expertise was product, right? So they're technical, they code, but really their expertise was around building products and building really clean user interfaces. And we thought that was the winning combination for this particular vertical. And it's just starting to manifest, right? So now NFTs are, and by NFTs, I mean non-fungible tokens. So things like art or various other applications, and decentralized finance is sort of having a moment. And Rainbow's able to ride that up because they've done the work over the past 2 years to create these interfaces. And so I guess whenever we're looking at a consumer-facing product, and Collaborative has been investing in consumer-facing products for a decade, so we have a lot of lineage there to kind of draw on, you know, it has to come down to the user interface ultimately, because I think that there's still, the general public often still finds crypto to be a little scary. even those that are somewhat technically savvy. And so I think just a really clean, something that feels comfortable, that doesn't feel like you need to keep track of your keys and you're going to lose all your money. And, you know, something that is just very easy to use is paramount for the consumer facing products.
Yeah, +1 to everything Steven said. I especially like the point about the founders being product first. We similarly with our investments, we are backers of Magic, and the founder, Sean, had sold his previous company, Kitematic, to Docker, and is a repeat founder, product first, and then just happened to use blockchain and be in the crypto space. And similarly, like another company, Value, which is a Latin American play. They're similar or akin to like a Venmo of sorts, where you can send and receive payments, and you see USD on the front end. But the crypto component to it, or the Bitcoin component, is abstracted away. And, you know, these guys are former Bank of Colombia, SEC, UBS, and are entrepreneurs that are focused on fintech first, but just happen to use Bitcoin as their tool of choice because it's better than any other, I guess you can think of it as in a tech stack perspective, better than any tool on the market. And so it's really important to find those types of founders when you're looking to invest in these types of deals.
That's awesome. Steven, you said, you talked about how crypto can be scary to consumers. I'm curious from both of you, like, how do you, there's a sense in which it's scary to LPs, right? Or prospective LPs. How do you engage your LPs in ways that are helpful to them to kind of, you know, like guide them along this Alice in Wonderland rabbit hole, where you are saying like, hey, I understand what's going on and I can give you a window into that, with context and you know, exposition. Like how do you do that? What has been the response from your LPs as you've kind of taken them down this road?
I think LPs are really interested to know more. And, you know, our LPs really span the spectrum of, you know, we've got pensions and endowments where we are their only crypto exposure. And so they really just enjoy jumping on a call, you know, perhaps quarterly, kind of going over like, what are the broad themes in the industry? What are the things we should be thinking about? Because, you know, they're managing billions of dollars and they've got a lot of, in fact, almost all their exposures outside of crypto. And so we're trying to explain to them, like, here are the pieces of the broader economy that are going to be most susceptible. And then at the other end of our spectrum, we have LPs that have hundreds of millions of dollars invested across funds, tokens, crypto companies. And for them, we're trying to give them sort of like the cutting edge from the earliest stage, right? So they see the broader kind of bigger picture, you know, with all the various things that they're involved in, but we can say, hey, here's what's happening at the formation, right? Here are the brand new projects that are bubbling up that you're going to want to think about with these larger companies sort of maybe a year or two down the road, but let's put it on your radar now. And so I think the answer to the question is it really depends on the LP and kind of where they are in the journey. But I think broadly, all of them are really want to know kind of like where this is going, either on a very fine-grained micro basis or on more of a broader macro basis.
Yeah, our LP base is, you know, runs a gamut from family offices to, you know, more institutional folks. We have venture funds who've similarly deployed, you know, tens of millions in crypto projects and understand this incredibly well. And then some firms who want to get into crypto and find the venture approach is the one that they're most comfortable with and really want to be long-term aligned with. And the way that we go about those conversations is from a macro perspective, similar to what Steven said, give the market outlook, a high-level overview, a 10,000-foot view of what's going on to give context regarding why we make the investments we make. But that said, I mean, it really is not different than running a traditional, you know, tech firm or fund in that you have, you know, cash flows, you have like that are valued, you have a balance sheet, you're showing them what number of users look like over time, what's CMGR or CAGR over time. and they get it. Like it's at the end of the day, these companies are businesses. And so it's not much different than evaluating like a fintech company, for instance. And I think as soon as people hear the word crypto, some folks get scared and they think it's a black box, but it really is a lot more transparent and a lot more easy to grasp for, you know, family offices and firms looking to make the leap, because at the end of the day, these are businesses like any others that you're investing in.
Yeah, those are great points. I know we've got a couple minutes to see Kareem popping up to shoo me away. I did want to get thoughts from both of you on just what are kind of the one or two kind of particular areas that are really exciting right now in crypto, and what are the implications for, you know, the real world as we see those grow over the next 18 months to 3 to 5 years. Let's start with you, Soona.
Yeah, that's an excellent question. I think Bitcoin backed or crypto backed synthetic dollars is huge and only growing. It's gonna be the growth story of like the next, you know, few years. And outside of that, I think infrastructure, just really the on ramps and off ramps, to a degree in the U.S., but largely outside of the U.S. as well, I think are the two really, really strong verticals that people should be keeping their eyes on.
Awesome.
Yeah, so I mean, we've invested in all these different verticals, right? Infrastructure, DeFi, NFTs, and so on. I think we're very bullish on stable coins, particularly decentralized stable coins like Maker's DAI and like Terra, and then synthetic assets, as Soona mentioned. I would say that the other thing we've really seen or gotten more excited about, I guess, over the last, say 6 months in particular, is sort of what's missing, right? So now we have all these different investments across all these different sort of angles. One thing that seems to be missing is some aspects of governance, right? So one of our most recent investments was around a governance marketplace, because you know, we've got low participation rates on many of these protocols in terms of like the voting and the proposals. And that's something that just has to get more robust to reach global scale. And so I think in addition to making bets along each of these verticals, we're also looking at a lot of the kind of like connective tissue that's just going to allow the entire industry to scale up.
Yeah, that's great. I'll take one from each of you to give listeners a blockchain capital. We continue to be really excited about infrastructure. As Soona mentioned early on, TCP/IP, SMTP, HTTPS, like all of that stuff is stuff that took a long time to build out, and still is like the guts of kind of what powers our decentralized communication system that we call the internet. And we think that there's still lots of work to be done there. So we're super excited about that. And then, as Stephen mentioned, DeFi and governance, it's like the next, you know, nut to crack. We're seeing some really cool experimentation. One of the amazing things that I always like to bring up to people who are interested in crypto but maybe not super familiar is the open source nature of what we're doing here makes repeated experimentation possible and accelerates innovation in ways that we just really haven't seen before, which is really, really exciting. So with that, you know, I know we're at time, but I'd just like to say, like, Soona and Stephen, two really, really excellent minds in the space. And to the extent that you're interested in connecting with them, please reach out. They understand what they're doing and have really great visions for the future. So excited to be their friends, and really thankful to have had this time with you all.
Likewise.
Thanks
Thank
so
you
much.
so much.